Welcome to the first ever episode of the VT Markets podcast. I'm your host, David, and today we'll be diving deep into the world of gold investment. Well, as you know, gold has always been a fascinating asset for many of us, and gold really holds a unique place in the financial markets for centuries, right? But the question, it really begs the question, like, what makes it such a valuable asset today, and how can you, right, as an investor, navigate its shiny yet complex terrain? To help us unravel the intricacies of gold trading, we're thrilled to have Styliana, our seasoned market analyst, with us. With years of experience and a wealth of knowledge in the financial markets, Styliana has been instrumental in guiding investors through the ups and downs of market trends. Her insights are not only invaluable, but also practical for anyone looking to make informed decisions in the gold market. So, how are you, Styliana? How are things?
Hello, David. Thank you for having me today in this podcast. I'm very good. Just a few words about me to introduce myself. I'm a market analyst for VT Markets. I've fallen in love with the financial markets several years ago, and I study the markets every day. The stock market, crypto, commodities like gold, it's something that is fascinating for me. So I'm excited that we're going to discuss about this subject today, and people that will hear this podcast can understand deeply what gold means and the potential of creating wealth using gold, and understand the historical significance of gold as well.
Perfect. Right. So I'll have to be brutally honest here. Right? I have absolutely no idea about trading. I'm clueless, right? So you gotta help me. You're the expert here, and I'm an absolute novice in the field. So I'm gonna rely on your words to teach me a little bit more about gold today, right? So I think maybe the best way to approach this is to take a more chronological view, right? All the way back to the past, right? To look backwards and then slowly understand like where we are today, right? So let's take a moment to go all the way back, and I think maybe we can start off by you telling us like a brief history of gold and maybe its significance as a store of value.
Absolutely, yes. So gold has been valued by civilizations for over 5,000 years. Actually, it's very interesting history of gold. It has unique properties such as malleability, resistance to tarnish, and the beauty that gold has made it ideal for currency, for jewelry as we know, and for art. It started with ancient Egyptians, Greeks, Romans, all utilized gold for trade and as a symbol of wealth. And in the modern era, gold's durability and scarcity have reinforced its status as a reliable store of value nowadays, especially during times of economic uncertainty.
Right, I see. Right, so it really is like there is just like I think I've read this somewhere, right? They talk about gold having intrinsic value. Do you think that's the case? Like, you've talked about it being like a store of value, but is there any real reason like why, aside from the malleability and the elements, right? Why has it been considered like a reliable store of value throughout all of history?
Yes, besides the gold's reliability from its intrinsic qualities, it's scarce, meaning its supply cannot be easily increased. It's like Bitcoin, it has a scarce supply, which helps maintain its value. And gold also does not corrode on or degrade over time, making it a lasting asset. Additionally,
Ah,
it has a Yes, tell
I
me,
see,
you
I
had a
see. Okay,
question?
that makes
Okay.
sense. That makes sense, right? Yeah, and it helps that it's pretty, right? I mean, I sometimes I see like
Yeah.
stuff that's plated in gold, like a gold, I don't know, rose or whatever. It just looks good, right? So I guess in that
Yeah,
sense, yeah, the people do
appearance
want to put.
matters, right?
Yeah, I'm a guy. For me, gold
Whether we
is.
like it or not.
Yeah, I mean, I think it's something that women also hold like in high regard, like together with diamonds. Like gold is just pretty and shiny. It definitely helps, right? So
Yes,
okay,
just
then
one last word I would like to add about
yeah.
um, the history and the preciousness of gold, that it has an universal appeal and acceptance. As you say, it's something that is beautiful to see. And it provides a hedge against inflation and currency devaluation, which bolsters
Ah,
its role as a store of value.
oh, so I read this somewhere that many countries actually keep gold like as a store of value to protect their their what do you call their sovereign funds, right? Is that true? Do countries themselves invest in gold to keep themselves protected against like the fluctuations of the market?
Yes, yes, many countries do that to protect the currency of the banking system of the
Ah,
country.
interesting, right? And so because this has happened, right? And we what do you think, right? The gold right, has been used to set policy, right? I read somewhere there's this thing called the gold standard, but I'm not really sure what it means. Can you tell me a little bit about it, and how do you think it has affected like the policies around the world?
Yes, sure. The gold standard was a system where countries tied their currencies to a specific amount of gold. And this system provided a stable framework for international trade and investments by ensuring that exchange rates between currencies were fixed. And it helped curb inflation and foster economic stability. However, it also has limited monetary policy flexibility as countries
Mm,
couldn't easily adjust their money supply.
makes sense. Do you know any countries that do this? Like I can't. I mean I never I never encountered any countries that do these in modern times, right? So I'm just struggling.
I know that Spain was doing it at a certain time. I'm not
Okay.
really sure if they're doing it currently.
Ah, okay. Okay, interesting. So why do you think like countries abandon this gold standard, right? And do you think in that sense it has affected gold's role in the financial markets?
Yeah, the gold standard was abandoned primarily because it restricted the government's ability to manage their economies during crisis. The Great Depression and two world wars strained the system, leading to its eventual abandonment in it was 1971, if I'm not mistaken.
Oh,
And
I
since
wasn't even
then,
born.
me too.
Yeah.
Since then, the gold has transitioned from a monetary base to a commodity and investment assets, and its price is now determined by market demand and supply, as most of the assets that we have, and it continues to serve as a hedge against economic and geopolitical uncertainties.
Yeah, I think I've seen like I did a bit of looking at the price history of gold. It seems like it always is a somewhat safe bet, right? Like if you had kept it inside your portfolio for a significant, you can see that the price of gold actually has went up. It would. It's quite a stable investment, so to speak, but sometimes it can be not very exciting, right? Because of its position as a like a hedge, right? What are the main factors that you think will influence the supply and the demand for gold?
Yes, as you said, it's not for everyone because it's not risky enough and it cannot bring a huge return for investors. But the supply of gold is influenced by mining, production, and recycling of gold. And the major gold producing countries include China, Australia, and Russia. Demand factors include jewelry and industrial uses, central bank purchases that they do to protect their wealth, and investment demand, of course, and economic conditions. During COVID, we had increase on the demand of gold, currency fluctuations, and inflation expectations also significantly impact the gold demand.
Interesting. So it seems like almost human beings have like a default, right? When situations like we were talking about COVID, right? When situations get kind of severe or scary, people just almost instinctively just go to gold. It doesn't matter where they're from, right? It seems like there's this universal, like you said, universal appeal. People just go back to gold whenever their times seem a little bit more volatile than most, right? Uh, and like while we're in the topic of COVID, right? And do you know is it true that geopolitical events impact the gold market in some way? I mean, if supply is fixed, right? Like the amount of people that are for lack of better mining the gold, right? That's the main source where the supply comes from. How do geopolitical events, which are mostly I don't think has much to do with the act of mining itself, affect the gold market?
Yeah, indeed, the geopolitical events impact the gold markets. These events often drive investors towards gold as a safe haven asset because it's considered to be as a safe haven for many years now. And during times of political instability, wars, economic sanctions, or like we said on in the COVID period, the uncertainty can lead to increase of demand for gold. And for instance, conflicts in the Middle East or trade tensions between major economies often result in a spike in gold prices as investors seek security. So it can be used this way by investors. That's why in these periods of geopolitical events, it impacts its demand and its supply.
I see. Right. So yeah, it seems like there's a common theme here. Right? Gold is really a protection sort of asset, right? It's not exciting, but it is safe. It is something that you should get your hands into if situations get worse. Situation is having wars, having this kind of major events that affect the political landscape like COVID, right? But I'm just perplexed. Like, why is gold this special? There are lots of other precious metals out there. I mean, we have what do you call palladium? We have silver. We have lots of other precious metals, right? So why is gold so special? Like, how does it compare to the other precious metals in the field, like silver or platinum, right? In terms of investment.
Yes, we have many other precious metals like silver or platinum, but gold is generally considered more stable than these ones, more stable than silver or platinum. While silver and platinum have significant industrial uses, gold's demand is primarily driven by investments in jewelry. So this makes gold less volatile, it's more stable and more attractive as a long-term investment. However, silver and platinum can offer higher returns during periods of economic growth due to their industrial application.
I see. So okay, I'm sold, right? I understand, right? Right now, gold is usually used for protection purposes, but there are a lot of like other assets that can also be used for protections, right? Like I don't know, like we can think about bonds, right? They are pretty safe, right? I mean, based on my understanding, they're pretty safe. Some equities like blue chip stocks can also be used as like protection in times of volatility. So why might an investor choose gold over these different types of assets such as stocks or bonds?
The main reason that investors choose gold is they often choose gold to diversify their portfolios and hedge against the risks that are in the markets. Unlike stocks or bonds, gold is not directly tied to a corporate performance, for example, or to interest rates. It can
That's true.
provide a safety net, yes, because bonds are very tied to interest rates. It can provide a safety net during market downturns or inflationary periods. And additionally, gold has historically maintained its value over the long term, offering
uh,
stability amidst the market fluctuations.
okay, yeah, that does make sense. Yeah, like gold is a natural like occurring sort of thing, right? Like it's just there. Whereas like policy and stocks are in a sense more like human-made institutions that can fluctuate based on perception, I guess, right?
Yeah, there are
So
many factors influencing them.
yeah, you're right. Absolutely. Right. And just now you were talking about how central banks buy gold, right, to protect, and we were just, discussing about this, right? Why are they buying, why are these central banks buying gold? Like, what role do they play in the gold market?
Central banks hold significant gold reserves as part of their foreign exchange reserves. They buy and sell gold to manage their reserves and to influence also the monetary policy. Central
Mhm.
bank activities can impact the gold prices. Of course, for example, large purchases by central banks can drive prices up, while sales can have the opposite effect.
Yeah, and are is this information like sort of open in the market? Like, can I know, like, for example, country X, how much gold reserves they have, or is it they only hint at it? Is it something that's always hidden for everybody?
It depends on the transparency that the country wants to, how transparent with the audience a country wants to be. We can find this information most of the times online.
Mm.
And yes,
So do you think these changes in these reserves that they have, do you think that they will affect global gold prices?
yes, sure. Changes in the central bank gold reserves signal their confidence in gold and reserve asset as a reserve asset. So when central banks increase their gold holdings, it often indicates a lack of confidence in fiat currencies. driving up gold prices. On the other hand, selling gold reserves can signal confidence in the economy and potentially leading to lower prices.
Makes sense. I just find it intriguing. Like, countries have abandoned obviously the gold standard, right? They're not. They're obviously using fiat, and right now it's not tied to anything. But at the end of the day, they still need these, like, hard assets like gold to sort of protect their funds. So in the end, I think nobody can escape gold, right? Everybody needs it even countries, governments need gold to protect themselves from the effects of volatility and the effects of the market. I find that interesting. So when you say they own gold, you mean that they own them in the real physical sense. I imagine, like, far off in the vault of country in a country, in a secret hidden vault, there's like tons and tons of gold. That sounds
Yes,
like
we
a
have
super
seen
spy
movies.
movie.
Yes, we have seen many movies.
Yeah, so
And
if that's the case, right? I mean, people are obviously buying physical gold to store, but it becomes kind of unwieldy. Like me, like a person, me, like I'm just staying in a flat. I can't possibly have a vault to keep like tons for to have tons of gold in my vault or anything like that. So, which brings me to my next point, right? There are obviously a lot of financial derivatives in the market. They're related to products, and I think gold is one of such derivatives, right? So, what are the pros and cons of trading the physical gold as opposed to their derivatives like futures and options?
mhm. Trading physical gold offers the advantage of owning a tangible asset, of course, which provides a sense of security for many investors.
Mhm.
And physical gold in the form of bars, coins, or jewelry has intrinsic value and can be hedged against inflation and economic instability. However, it also comes with drawbacks such as storage costs. As you said, it's not possible to keep the storage of gold bars in an apartment, for example, insurance and liquidity issues, and selling physical gold quickly can be challenging and may incur additional costs. Now, on the other hand, gold derivatives like futures and options offer more flexibility and liquidity. And these financial instruments allow investors to speculate on gold prices without owning the physical metal.
Mhm.
Especially futures contract enable investors to buy or sell gold at a predetermined price at a future date, which is something a more complicated asset for someone who's starting now to understand. While the
Okay.
options provide the right but not the obligation to buy or sell gold. And these derivatives are highly leveraged. It means that they require a smaller initial investment to gain exposure to these large positions. But however, this leverage also increases the risk for investors. Investors can lose more than their initial investment when
Mm.
trading derivatives. It requires really good understanding of the market and careful risk management.
Makes sense. It's like a trade-off, right? You put in, you're taking like a sort of a risk so that you can expose yourself to larger market opportunities, right? I think it's a trade-off. You have to consider what you're trying to achieve, right? When you're getting into yourself into leverage in large positions, right? So okay, you've talked to me about the futures and the options. What about ETFs? Like what are gold ETFs and how can they be useful for investors?
And gold ETFs, or as the whole word is exchange traded funds, are investment funds that track the price of gold and trade on stock exchanges, which is similar to stocks. Each share of gold ETF, for example, represents a specific amount of physical gold, providing investors with exposure to gold prices without the need to handle the metal. It's more convenient, and the benefits of gold ETFs include ease of trading, as they can be bought and sold throughout the trading day at market prices. And
Oh,
if I could
okay.
say some benefits is that they offer liquidity, allowing it allows investors to enter and exit positions quickly, and ETFs have lower transaction costs compared to buying physical gold and eliminate the need for storage and insurance. Gold ETFs, they can also provide you with diversification, as they can be included in investment portfolios alongside with other assets.
Mhm.
However, investors should be aware of management fees. There are management fees and tracking errors where the ETF's performance may slightly differ from the actual gold price.
Okay, because it's a derivative, right? So there definitely is like some sort of variance. I imagine that this variance in price might also happen for something like futures and options, like slight variances. Do things like these happen?
Yes, in this case too.
Okay, makes sense. Right. Okay. Now you've sold me, right? I understand that, like why we have to go gold, right? But how do I do it, right? Like what I know this thing that a lot of traders do. They called it technical analysis, right?
Mhm.
Basically it's about chart patterns and to see where the next psychological point or something like that. As you can see, I'm a
Yes.
complete novice. Right.
Mhm.
So what are some key technical indicators, right? Traders should look for, when they are trading gold.
Traders often use a variety of technical indicators to analyze gold price movements, and some key indicators include the moving averages, which smooth out price data to identify trends. This is the goal. We have the 50-day and 200-day moving averages, which are particularly popular. And when the shorter term average crosses above the longer term average, it can signal a potential uptrend and vice versa. We also have the RSI, the Relative Strength Index, which is another important
Mhm.
indicator, measuring the magnitude of recent price changes to evaluate overbought or oversold conditions. An RSI above 70 indicates overbought conditions, suggesting that the potential price correction it's in the market, while an RSI below 30, it indicates oversold conditions, suggesting a potential price rebound. I can also discuss a bit about the Fibonacci retracement levels, which are also useful for identifying potential support and resistance levels, which is an
Mhm.
important factor of the technical analysis. And these levels are based on key ratios derived from Fibonacci sequence, and it helps traders to predict possible reversal points in the market. Lastly, I would also like to add the chart patterns like head and shoulders, triangles, and double tops bottoms that can provide valuable insights into the potential price movements of gold.
Wow, seems like there are a lot of indicators that a trader should look out for before they engage themselves in gold, right? Honestly, a lot of these things are. I mean, I've heard of them before, but I've never really done the deep dive. Do you think, right, with so many variables to consider, that sometimes for at least for new traders, it can be a bit daunting to sort of start trading any asset, like to begin trading in general.
I think it's not something that is really hard to understand. It's simple and it's logical, but you just need to start. The traders need to start doing it to prepare to exercise. So if they do it one, two, three times, it will become familiar to them.
Okay, yeah, I guess it's like a muscle, right? You have to exercise it
Mhm.
in order to get better at it. That makes sense, right?
Like
So
everything new that you learn.
yeah, I guess it's be it learning the violin. I guess trading is in that sense, right? You got to put in the hours, you're gonna put in the effort, and at some point you be good at it, all right? I'm also curious to know. Just now we talked about government policy affecting supply and demand for gold. Is Are there like economic factors like inflation and interest rates, right? These things, do they influence and affect gold prices?
These are my favorite things to look at, to be honest, because I'm a long-term investor myself. But a combination of both is the right formula. So macroeconomic factors play a significant role in influencing the gold prices. Inflation is one of the key drivers, as gold is often seen as a hedge against inflation. And when inflation rises, the purchasing power of fiat currencies declines, leading investors to seek assets that can preserve their value, such as gold. This increases demand and can drive up the gold prices. Interest rates also have a major impact on gold prices, and generally, when interest rates rise, like in this case, the opportunity cost of holding gold increases as investors can earn higher returns from interest-bearing assets like bonds. And this
Mm-hmm.
can lead to decrease in gold demand and lower prices. So conversely, when interest rates are low, gold becomes more attractive as an investment, supporting higher prices. And we also have other macroeconomic factors like currency strength, economic growth, geopolitical events. A weaker dollar, for example, makes gold cheaper for holders and of other currencies, and it boosts then demand and prices. And economic uncertainty and these tensions that we have, geopolitical tensions, often lead to increased gold demand as investors seek for these safe haven assets.
Interesting. Right. Have you ever had the moment, like a moment of revelation, like like sometimes you're out in the restaurant and you're eating a meal, right? And then you think this is so well done, right? And then you walk behind to the kitchen and you realize that there's so many steps and everything is sort of linked, right? It's like some kind of interplay, right? Where one thing leads to another, and then the final product is what you see. It seems so simple, but it's actually really, really, really hard to prepare. So I think that's my impression of gold right now. Like there's so many factors behind the scenes that people don't really look at. They just look at the price. But it seems like everything is interconnected and it's causing the price of gold to go up or go down based on all these market sort of market what do you call them, signals, right? And
Mhm.
and I just am fascinated, right? Uh Moving on, like can you tell me some common strategies that traders use in the gold market?
Yes, sure, certainly. One common strategy is trend following, where traders identify and follow the prevailing trends in the gold market. And this involves using the technical indicators that we discussed before, like moving averages to spot upward or downward trends and make trends accordingly. Trend followers aim to profit from sustained movements in gold prices. We also have range trading, which is another popular strategy, which involves buying gold when its price is at the lower end of a range and
Mhm.
selling it when it's in the upper end. This approach relies on identifying key support and resistance levels where the price tends to bounce. I will also mention another three, but I will not analyze them like I did with range trading and
Okay. Yeah,
because
sure.
okay, we have a limited time. Uh, Scalping also is a more aggressive strategy that focuses on making small profits from numerous trades. Swing trading involves the holding positions for several days, and position trading is a longer term strategy where traders hold into their gold positions for months or even years.
Interesting. All right. So yeah, it seems like again, right, more methods to approach this one simple product. There's no like one size fits all policy for anybody. Everybody obviously has a different sort of risk appetite, right? How can someone like me, like a retail investor, right, start trading gold, and what should I be aware before I enter the market?
Yeah, for retail investors looking to start trading gold, the first step is to educate themselves about the market. Starting from this podcast, for example, understanding the basics of how gold is traded, the factors that influence its price, and the different trading instruments available, which is crucial. They also need to familiarize themselves with technical and fundamental analysis to make informed decisions about trading. And it's essential to choose a reputable broker that offers gold trading services. Uh, they need to look for the ones that provide robust trading platforms, competitive fees, reliable customer support. It's also important to stay updated with global economic news. It will not take much time from your daily schedule just to have a look on the economic news, as gold
Mhm.
prices are influenced by various macroeconomic factors. You can join online forums, following market analysts, and subscribing to financial news can help investors stay informed and make better trading decisions.
Makes sense. Yeah. Thankfully, right, the VT Markets app allows you to just do that. Everything is
Mhm.
consolidated into one nifty place, right, where you can see all the news, the market notification, market signals, right? I think it's absolutely handy to have. Yeah. So if you haven't already downloaded it, please download it. Sign up for an account with VT Markets. I promise you, it'll be worth the effort. Yeah. Moving back to talking about gold, I think you've given me a really good like overview of how gold has been so far, like all the history and everything that has affected it, what's affecting it right now, right? So I just want to know, like, what are the current trends in today's gold market, and what do you think might be driving them?
Okay, yes. Currently, the gold market is experiencing a mix of bullish and bearish trends, influenced by a variety of factors. One significant trend is the increased demand for gold as a hedge against the high inflation that we have. And with rising inflation rates globally, investors are turning to gold to preserve their wealth. The trend is driven by a loose monetary policies adopted by the central banks, leading to concerns about the currency devaluation. Also, geopolitical events that we have continue to play a critical role in driving gold
Mhm.
demand. Ongoing conflicts, trade disputes, and political instability in various regions create uncertainty, prompting investors to seek safety in gold. Technological advancements and emerging markets are also impacting gold markets. For instance, the development of blockchain technology is improving the transparency and efficiency of gold trading,
Yep.
attracting more investors to the market.
Yeah, they call them what RWA, right? Real world assets, right? It's
Yes.
I read up on that a couple of days ago. It's really interesting, right? Like how they associate the tokens with the physical asset themselves, right? So okay, blockchain is cool, right? It obviously is already affecting how we see trading gold as we speak, right? So how do you see the gold market evolving the next 5 to 10 years?
Yes, in the next 5, 10 years, I expect the gold market to evolve in several ways. Firstly, the adoption of digital gold and blockchain technology will likely continue to grow from what we see, making gold to grow from what is efficient, accessible, and this could attract a broader range of investors, include those who are currently underserved by traditional financial markets.
Yes.
Overall, the gold market is likely to remain a vital component of the global financial market, providing a hedge against economic and these geopolitical uncertainties.
Makes sense. Okay. Wow. Wow. I think we have a lot. I mean, within our lifetime to see, right, the evolution of gold.
Mhm.
It's truly a great time to be alive. I really look forward to seeing what might happen for gold in the next 5 to 10 years, right? But I think that should be it. I mean, I'm gonna personally start trying to trade and see, what sort of based on what you've advised us so far and see, what I could get from this journey, right? What are the key takeaways for our listeners about gold trading fundamentals you think you can share?
Some key takeaways about the gold trading fundamentals are the historical significance that we mentioned has been a valuable asset for thousands of years, the gold, servicing a currency as a currency, a store of value, hedge against economic uncertainties. It's important also to mention the supply and demand. The price of gold is influenced by mining production, recycling, jewelry demand, and industrial uses, central bank purchases, investment demands, all this. Gold also investment comparison, I would say. Gold is often more stable than other precious metals like silver and platinum, from what we
Mhm.
said. Central banks hold significant gold reserves. Trading instruments, investors can trade physical gold or derivatives like future options and ETFs. We analyzed a bit about the ETFs before.
Yes.
Technical and fundamental analysis, where traders use the various indicators and macroeconomic factors to analyze the gold prices. We mentioned moving averages, RSI, Fibonacci, and all this. Trading strategies, some common trading strategies as we discussed, the range trading, scalping, swing trading, and position trading. It
Hmm.
depends on the experience and the risk tolerance. And the market trends, it's something that investors should have a look on. And the future outlook of gold market is expected to evolve with these technological innovations.
Wow. Yeah, I couldn't have summed it better myself. You got it all on lock, right? Any
Thank
final
you.
thoughts or advice for our listeners?
If I could give one advice, my final advice for those looking to invest in or trade gold is to approach the market with a balanced perspective. Gold can be a valuable addition to your investment portfolio, offering stability and a hedge against this uncertainty. However, it's important to understand the risks involved always when we're trading and to trade or invest based on informed decisions. This is what I would say.
Perfect. Thank you. Thank you. Yeah, I think I've learned a lot during this podcast, and I really appreciate the time that you've given me. I think I have a new perspective on gold now, and yeah, whenever I look at gold, I'm just gonna think back to this podcast and think about the things that I've learned. Thank you so much for joining us, Styliana, and
Thank you,
for
David.
everyone that's still listening to this podcast, we will have one up coming up again shortly. So we hope to see you again there. Thank you for joining the VT Markets podcast, and we hope to see you again. Join us for the next episode of the VT Markets Traders Brew podcast, where we'll continue to explore the fascinating world of the financial markets. Whether you're a seasoned trader or just starting out, there's always something new to learn. Our podcast is available on Spotify, Apple Podcasts, Amazon Music, and iHeart. Be sure to subscribe to us on those platforms for new episodes of our Traders Brew podcast. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. Trading leveraged products such as Forex and CFDs carries a high level of risk and may not be suitable for all investors. There is a possibility of losing all your initial capital. Before trading, you should fully understand the true extent of your exposure to the risk of loss and your level of experience. Please note that past performance does not constitute a reliable indicator of future results. Future forecasts do not constitute a reliable indicator of future performance. If you do not fully understand the risks involved before deciding to trade, you should fully consider your investment objectives, level of experience, and risk tolerance. You should become aware of all the related risks and seek independent advice from a suitably licensed financial advisor.